Welcome back to the monthly portfolio update. As usual, I hope you'll find this information useful, but disclaimer, please note that this is not investing advice, it's just my portfolio as it stands on Saturday, October 1st, and it can change at any time without previous notification. Following an investment strategy without doing the work yourself is almost guaranteed to result in losses. So please be careful, since it's your responsibility to do your own research before investing. If you are in the markets right now, you know that this was not a great month due to a few bad news. First, Fed's hawkish predictions and the 75 basis points increase that scared the markets, as well as Putin's renewed nuclear threats due to the inability to win the war in Ukraine, Europe's struggle with energy prices, which is becoming a problem, as well as China's financial problems, etc. Overall, not a great month. However, that being said, I did a few purchases even though it is probably not the best moment to buy right now. After doing some additional research, I really fell in love with one of the 3 new watchlist additions from last month, so I decided to make it a part of my portfolio. Simtel, the renewable energy, which is in a growing sector, and the telecommunications company from Romania, ticker SMTL, is a company that has a lot of projects in the pipeline and a lot of connections in the Romanian renewable energy ecosystem. The 6-month report showed strong growth, so I allocated a small position, but not insignificant, of my portfolio to it and hope to hold it for long term. Also, I did maybe the 2 most surprising moves so far by adding a little bit to my gold position, even though it is not the anti-inflation hedge that everybody hoped for, and also now I am the proud owner of 11 new altcoins, alongside my Bitcoin, Solana and Polkadot investments. I fell in love with the experience last month from winning one Polkadot on Revolut Learn and Earn program for going through the crypto basic courses, maybe 10 minutes of my time. Please check it out if you haven't done so, it's free money. So I went through the same courses with Coinbase, Binance and CoinMarketCap with mixed results. You can see the link in the description if you are interested. In terms of new funds, I actually received some dividends this month from my international positions in Prosus and the quarterly S&P 500 dividend, but nothing to write home about. Next month, I should receive a significant payment from the Romanian bonds that I own, so I am really happy about that. That being said, there were some good news as well this month. First, it seems that my logistics company, Aquila, wants to give an additional extraordinary 4.2% dividend yield, which will be voted next month. It's not a life-changing amount, but it's something, and something is better than nothing. Also, Transgaz, which is my biggest holding, wants to incorporate last year's profits and give 15 stocks to everyone that I hold. That is not a stock split like the recent Tesla split, because actually the company will theoretically have more money than right now. The stock jumped 9.3% in one day after the news was made public, which helped keep my losses smaller this month. Anyways, this is my current portfolio allocation for October 1st. Overall, the currently invested portfolio is down 5% since last month, and this is because of the individual good news I got on Transgaz. It would have been much more, since probably this is the worst month I had so far this year. Overall, the active invested portfolio is down about 18%, actually 17.63%, but this is not an unexpected event for me, since the surprise was the summer rally, which didn't really make any sense, not in the current downturn. The new allocation pyramid is as follows. Because the whole portfolio went down, the more stable assets represent now a slightly higher percentage of the overall portfolio. Like, for example, real estate, which is not liquid, so the price stayed more or less the same, and thus it's 0.5% more of the total portfolio allocation. Also, the value stocks aren't really up in nominal terms, but they are down less than the other assets, and thus their portfolio allocation is now bigger than last month by a full percentage point. Let's talk a little bit about the potential upcoming crash. The disclaimer is that I am not really a macro investor or a forecaster, and nobody really is, so there is a very small probability that all the things predicted below will happen in an orderly fashion, but the key takeaways are: first, I am still very heavily invested in the markets. Most investments produce cash flows like dividends, bond coupons, etc., and I have a relatively diversified portfolio, both in terms of sectors and countries. Secondly, I also have a relatively comfortable cash position, not as good as I had, let's call it, 3 months ago. That's why I'm building it up even more in order to buy in case of further discounts, but there is no hurry to get the lowest price. I think the name of the game right now is patience. My current biggest fear is the fact that I am doing this full time and I always feel the need to do something, buy this, sell that, which I don't think it's a good strategy right now. All that being said, I do expect 1 or 2 more years of pain, so most likely 2023 and partially 2024. Even if inflation drops due to the base effect, meaning that the increases in interest rates actually catch up and the inflation will go down, the economy will be affected and the markets will take a little bit to heal. I don't think we hit peak pessimism yet, meaning, I don't know, people jumping from windows or people hating the markets, etc. So when that happens, it's most likely that prices will go lower. One last note, even though things are bad right now, and of course can always get worse, like a nuclear war, high unemployment, etc., I think it's starting to be more potential for having good news than actual bad news. So this is my overview, so please act accordingly. One last thing related to this YouTube channel, some of my friends recommended doing more content like reaction videos or maybe add some clickbait titles, etc. But my main goal is not to build this channel up. Don't get me wrong, it would be awesome if it grew organically, but it's not the main thing. And I feel that if I fall into the trap, I will focus more on content than the actual investing process, which should be the main thing, of course. Also, this can be a double-edged sword. If I recommend to buy an asset, then I will have to back the idea up due to the commitment and consistency principle, even though it might dawn on me that it was not a great pick. Or, on the other hand, if I discard it right away, if the thesis is not playing out as expected, maybe you guys would feel betrayed. Anyways, for now, we keep the same schedule, at least until the end of the year, and we will reevaluate then. If you found this information useful so far, please don't forget to like and subscribe. It really helps in order to get this info out to more people. Thanks and have a great day. Bye.